All right, cool. All right, so go ahead and share my screen and US 30. All right, you see my screen?
Not yet. Still see you. Okay. Hang on.
Okay, I got a new internet thing. I'm connected on 5G now. So
yeah, it's loading.
It's a US 30.
Loading. Okay, cool. I can see your screen. We should test it for lag real quick. So why don't you I don't know. Why don't you do something? I can tell you when I see it happen.
All right, let me. All right, you see my screen?
I see the screen.
I just drew a notifications.
Oh, your screen's gone. Now I just see your Diamond Life profile picture or profile symbol.
Yeah, I don't know what's going on. I'm connected on 5G. Let me see. Yes, strong connection. I mean,
might just be struggling.
You don't see the chart?
Chart popped up again. Or sorry, like your trading view popped up again.
Actually,
go ahead and draw something.
Let me just probably just need to, maybe you just need to share your screen, and then I will take a look at the Monday to Wednesday range, and then we'll mark up the 5-day Asian range thing.
Okay.
That I think I may have showed you how to do it, but maybe there was somebody else. That's probably the way we need to do it. Yeah.
Sure, use a refresher then.
Yeah. So let me. So just share your screen, and then we'll take a look at last week, and then we'll go to. You got to pull up another chart because the 5-day Asian range thing is. You want to have a totally separate chart. Actually, let me see how we should do it. Nah, we'll just have a totally separate chart for this. Because it's powerful, man. I mean, because you could trade it on demo this week. Like I'll notify you. Hold on, when you guys leaving for Africa?
18th.
Okay, yeah. Well, hold on, 18th. Okay, yeah. Well, it should break out either up or down before then, and you could trade it on demo. You'll see. I'd be like, just hold it, because you're gonna see it. I'm gonna say like, hey, it's gonna go down. And you're like, hold on, it's going up though. But if you just hold, you're gonna see it's gonna go straight to that 50%, man. And that could just be one trade. Some people only trade once or twice a month and still make 100,000 because they put a lot of leverage because they know exactly what they're doing. They put a lot of leverage on that one or two trade. Like, it don't take a lot of trades to make this stuff work. But yeah, you can share your screen.
You don't have to do a lot. You're saying you don't have to do a ton of trades.
Yeah, I used to hear ICT say that, and I used to be like, "What is he talking about? Like, you got to trade a whole lot." But then you start really seeing how it works. It's like you just got to wait on your setup. Like that, this whole setup thing, this 5-day Asian range thing, is going to run in one direction to the 50%. That's a fact. And especially if you mark up S&P 500. Like if you watch one of my videos, I literally showed how S&P 500 showed me what US 30 was going to do. It showed me 2 days in advance what US 30 was going to do. So, and I didn't know that before. I didn't know that until last month. So now I'm gonna make sure I have S&P 500 marked up religiously, because sometimes it'll predict what US 30 is going to do. So it's like a cheat code. But But yeah, man, can you scale it out on the right hand side so we can see the chart with the little scale? Yeah. And then you can put that box, the blue box, on the Monday to Wednesday range. Yeah, just clone it, and then I'll just reiterate something to you that I was trying to show you before.
Not.
Yeah. Now, if you go back to last week, yeah, and I'll show you why it's dropping and where it's probably dropping to. I'll probably try to. Well, I'll take you on a higher time frame when we get to that point.
Yeah, I get you. What am I missing on the? Let's see. I still got to finish doing.
Well, yeah, I
the
just want
monthly.
to. Yeah, the monthly is the pink line, and then so you could put that on. I think that the first was on what, Friday.
Yeah.
Yeah,
That's
so
right.
make that line fat. So make it a 4, and then we'll put it on the opening price of the first, because this will show you like the sentiment.
Yeah, that's the fattest.
Oh, okay.
Let's see.
Yeah, you could drag it over to the midnight on the 1st of September. And what's the level? What level do you have the weekly opening price on? Because I just want the monthly and the weekly to be distinct from each other. It seems like the weekly is on a 4 as well. I think it's on a 2, but it
It
looked like
might be.
it's on a 4. Yeah, put it on a 2, because you just want them to be like distinctively different. Yeah, I guess you could just put it on like a 2 or something. Because
I get you. I
yeah,
don't know. I mean, I see one is pink and one is blue. Is
okay,
that
yeah, well,
me up or?
yeah. As long, I mean, yeah. If you could see it clearly, then you could just keep it the same. Then
Okay.
okay,
Because I haven't had trouble
yeah,
with it yet, but like if something comes up, I'll
okay. And
double
just
check.
hold down Shift, and then that'll make that pink line straight.
Yeah. I want to start with it's dropping, so starting there, and then I'm gonna grab the other side, which
Actually, what you want to do, yeah, go ahead and make that line straight and drag it all the way out to October 1st.
oh, there we are.
Yeah.
And like it should be on the hourly scale, right?
Yeah. And then what I want you to do is also go ahead and clone this line and go ahead and mark up the last 3 months, because the way ICT teach it is we always want to look at the last 3 days,
Yeah.
the open, the high, the low, and the close, in the last 3 months. It's something we call the power of 3. So if you look up the last 3 months, like if you clone that line and look up the last 3 months, it'll show you what price is doing on the opening price. So go ahead and put it on August 1st and then July 1st, just so you can see. I think we already did it on a few of these. Yeah, so I guess the only one you got to put it on is August 1st, because I think we already put it on July 1st. That pink, the first pink down there at the bottom.
Yeah. I'm with you there. Hang on. All right. So where are you gonna go?
Yeah.
Damn it! Didn't zoom in enough.
Yeah. You just hold down Shift and then the line to be straight, and then just clone it. And you could just drag it up with the don't drag it up with the circle part, because it's gonna move it. Just drag it up with the, like, in the middle of the line or something.
I feel that.
So it can stay straight. Yeah.
That's it. That's it. Okay, so I'm holding this.
Yeah, you could just hold down Shift and then it'll make it straight, and then just go in the middle and pull it up, and then it'll.
Yeah, it didn't. Oh wait, maybe did it work? So, nah, it's not working. I gotta grab the other one. Oop. Okay.
All right. All right, cool. So, I mean, I saw this bearish divergence anyway. And so a lot of times, like you'll see in the future, man, it's going to be hard for you to, like, because you don't have a bias. You think it's going to go up, but you see the technicals telling you it's going to go down. And sometimes you have to fight that, because in my mind, I'm like, I see it going up. But then based off of what I'm seeing right now, it's going down. And you see with the opening price of the monthly, you see that's the monthly opening price, but you see the monthly opening price this month opened all the way down. So if you got to ask yourself, okay, so where is it going down to? And then I'll show you on a higher time frame. So yeah, I think we already marked up the one.
Oh, we're good.
Yeah, I think
Sweet.
so because you have another pink line down there somewhere.
Yeah. I think.
Yeah, maybe you need to pull it out and pull it all the way out though. Oh, you already did. You already put it all the way out. Okay, yeah. So yeah, so you see this monthly opening price open below the previous month.
Mm-hmm.
So this is showing you like, okay, well, there's a reason for that. So we have to go in a higher time frame. So go to the we have to go to the high. So go to like the 3-month chart and take off all the annotations. I want to show you something. I'm trying to show you where it's going to. So go ahead and scale it out and then take off the annotations. Just hit the the little I symbol to the right, to the left, and then it'll take off all the annotations. And then just scale it out to the left. Well, actually go to that's not enough. Yeah, scale it out and then zoom in to the where we are right now, that little price section right there, that little V. Yeah. So now you got to ask yourself, okay, so where is it going down to? Now, so what do we have right here? So we got a bullish order block. That last down close candle.
The last one?
Yeah,
There?
the last down close candle to the left. You see the red candle? That's the bullish order block. So you have to ask yourself, okay, so where's price coming? You have to go on a higher time frame. You have to live on a higher time frame. Once you really understand the stuff, like you'll see how important this is. So we got a long wick right there, right?
Yeah.
So you have to understand that with the order block, the most sensitive points is the high, the middle, and the open price. So now what I want you to do is grab the go ahead and grab the see where the plus sign is, see where it says plus and minus, the little magnifying glass to the left.
Mm-hmm.
Go ahead and click on that, the little bar, the little measuring bar above that. So click on that, and then I want you to mark up the wick, mark up the wick of the order block. Mark up the wick, yeah, and drag it to the right when you do that. Okay, so hold on, I'm trying to zoom in so people can watch this recording. So drag it all the way to the right. Just keep dragging. Keep dragging to the right, to the right. All right, so and pull it all the way up to the top of the wick. All right. Now, so right here, this is showing you that remember, consequent encroachment is an area that price will want to come to, which is 50% of the wick. See what I'm saying? So what I want you to do is you may have to mark this up. So you may have to mark up 50% of the wick as consequent encroachment. And then what I want you to do is also mark up 25% of the wick, because sometimes it'll come down to 20. It looked like it already came down to about 25%, which is half of the half. Because see, all this stuff is mathematical. So so this is how you got to be thinking. So we're on a 3-month chart. So you got to be thinking like, okay, well, where's it coming down to? Because remember, price opened below the previous monthly opening price. So that means that it's trying to come down somewhere before it goes back up, because price is destined to take out that high. It's destined to take out the high from what I see. But you see right now price is pushing down because it came up into mean threshold of that last up close green candle. That's a bearish order block. So you see once it came up to about 50% of that green body, it started reversing. It reversed down. So that's why you have to go in a higher time frame. So you can go ahead and turn on the annotations, and then let's try to mark up consequent encroachment of that wick. And this all gonna make sense when we zoom back down to the 1-hour chart. So what you're gonna have to do is get the measuring. You're gonna have to get the actual measuring thing and turn back on the annotations, and we're gonna try to mark up that wick right there.
All right.
Yeah. So now go ahead and get the measuring bar, the real measuring bar, not that one, the actual. Yeah. Click on. It's somewhere over there. It's the date and time measure thing. The date and time measure. It's I think it's on that one right there. Yeah. Go all the way to the bottom. So go ahead and mark up that wick and then pull it all the way to the right. Yeah, and then pull it all the way to the right. Like, well, pull it over like one bar to the right of that green of that last red candle. Yeah. So just now put it back on the wick and then pull it all the way over the green Dayton candle thing that you just created. Because we're trying to mark up this wick, yeah, and just pull it over and pull it over all the way to one bar, pull it all the way over to one bar to the right of that last red candle, the little red candle. Yeah, so right there. And so make it a little thinner. So double click on it and make it thinner. 'Cause I think it's on like a 4 or something. What is it on? Is it on a 1?
It's on a 2.
Yeah, put it on like a 1, and then turn down the color. Put it on like the Y on opacity, because you're gonna have to be able to see what you're marking up. So bring it down to the Y, and then do the same thing for the other one. Click on the other one as well. The border. Double click on it again.
Oh, I
Yeah,
see.
yeah. Double click on it, and then bring it down to 1, and then bring it down to the Y so we can see, and bring the thickness down to 1. Okay, so now just zoom in, because you got to be a little. I know you got the magnet thing on, so I don't know. I don't know how the magnet thing work all the time. So is it actually pulling it to the exactness?
No, no, it's to the exact
Okay.
close of this
Okay.
date here.
Yeah, because I tried it a few times, and it didn't work. It wasn't doing it exactly. So maybe they fixed it. So if it's exactly on the bottom, the open and the close, then we can go ahead and you can go ahead and pull out a trend line, and then the let's mark up the middle of that wick. So go ahead and pull out the trend line right there to the left. So you got to draw a trend line, and then we're gonna mark up the trend line as we're gonna call it a consequent encroachment of a bullish order block wick right there. So go ahead and get the trend line, and then put it in the middle of the wick, and then you're gonna have to draw it all the way out to where we are right now in price.
First, I think I got to fix the
Okay, yeah,
date line.
yeah. You have to get the magnifying glass and zoom all the way in. But I thought you said that it automatically tags it to the exact high and the exact open.
Right. No,
But
I
if
hear you.
it don't, then you got to zoom in, get the magnifying glass and zoom in, and just put it exactly on the top of that wick, because it's going to be a big difference when you're on a 5-minute chart, because if you're going to be holding out for price to hit a certain area, and if it's not marked up properly, it's going to reverse on you. You're going to be thinking it's coming back down, and it's never going to come back down, and you're going to take a loss. That's why with me, I make sure it's exactly perfect, because I know all this stuff is not random at all. It's literally like ICT said. He said it's grossly accurate, you know. So you're gonna have to get the magnifying glass and zoom in.
Oh, I can't actually see it. So
Yeah,
I'll
yeah,
fix
yeah,
this real quick.
yeah.
There's that. All right, let's turn off this guy.
Yeah, so pull it up and then zoom in and make sure it's exactly on the top of that wick, and then zoom in and make sure it's on exactly the opening price of that red candle, and then we can mark up the middle of it, because it's consequent encroachment. Like, these are very sensitive areas. These are targets for the algorithm to go towards, because the market sees these wicks as gaps, as ICT say it. So it's looking at these wicks as gaps. So if we know how gaps work, we look at long wicks. Every time I see a long wick, I'm like, that's a dead giveaway, to let me know what price is trying to do. Because I'm immediately gonna mark up the middle of that wick, and then I'm gonna mark up half of the middle of that wick, which is 50% of the 50%. And that'll tell you, because if it can't go past the 25%, then that means that it's still bullish or bearish. But if it go to consequent encroachment and it go way past it, then that means that it's trying to go down. Even if it goes up for a little bit, it's trying to come down, because it already told us, because it went past 50%. So it's like little stuff like this that nobody was talking about, that ICT basically created. And that's why people hate him, because it wasn't in books. All the stuff he talked about, nobody was talking about it. He talked like, hey, I know you hate that I say that, but it's the truth. You know, the people that hate him. So yeah, you could go ahead and get the magnifying glass, zoom in, make sure it's perfect, and then zoom in on that opening price as well. Yeah, just pull it all the way to the right, the magnifying glass.
Like that.
Yeah, yeah, all the way to the right. Yeah, right, and then make sure it's really thin, all the way thin, because it's gonna capture it. Boom. Now you can just pull it up, and then just try to put it on there as best as you can, and that should be good enough. So just pull it up all the way to the top of that wick. Yeah. Nah. You gotta click on the ball because it's gonna move the whole box. Yeah. Just when you click on the little circle, it's just moving the top. Is the bottom is still the same. Now you gotta zoom. You gotta zoom out and then make sure the opening price of that red candle down there. You gotta make sure it's on the exact as well. And then so you could just zoom out and go to the bottom of the red candle. And
I know. I'm trying to do is can I just line it up with with the numbers. The high on this one is 34275.6.
You could do that, but like I said, you'll notice when you zoom in, it's actually a lot of space in between each number.
Oh, really?
Like I said, because we only been on a 1 hour chart. When you really start day trading, you're gonna be on a 5 minute chart, and this stuff gonna have to be extremely accurate. Like just because it says 34291 and 34292 don't mean that it's a lot of space in between there. When you go down to the it's like micro ticks, even though it's not like tick for tick. That's why when I'm doing it, I make sure it's zoomed in exactly. Because I'm telling you, man, like when you zoom in exactly and make sure it's perfect, you'll see. Like what I do sometimes is I'll literally go all the way to the 3 month chart, mark up consequent encroachment, and as price is approaching it, guess what I do? I go down to the 1 minute chart. I'll go down to the 15-second chart and see what price does when it hits that order block. And you'll see like it's an immediate reaction. Like it'll be coming down slowly for 2 days and then hit that order block and boom, it just go crazy. And so that's what I like to do. And you probably want to do that in the future. Just zoom in on a 1 minute chart and see how price reacts at these areas, and you'll see, you know. So yeah, so it look like it's kind of marked up, and then you can mark up the opening price of the red candle, and then we can mark up the middle of it, which is consequent encroachment.
So you're saying it's more accurate to eyeball it than it is to
Well,
follow
no,
the
you
circumference?
you can do the numbers, but what I'm saying is between 34,080 and 34,081, it's a space. It's a
Right.
small amount of space, and so it's not like you can put it on a number. It will be on a number, but when you go down to the 1 minute chart, like it's space in between 34,080 and 34,081. And you'll see that price will not go down to that number. It's going to go down to where the space on the chart is. But I mean, you can't really lose just putting it on a number. But I'm just saying for me, everybody a little different. But for me personally, I got to make sure it's extremely accurate. So because it's space in between 34, it's space in between 31,000 and 31,001. But you haven't been like on the lower time frames yet. So but I mean, you can't really lose just putting it on a number. So we could just do it like that for now. But like I said, I've studied this stuff like a crazy person, and I just know for myself that's what it is. So you can just mark up the consequent encroachment, which is the green line in the middle, and then you'll label it bearish order block 3 month consequent encroachment, and then you'll put long wick so you can know, because when you're on the 1 hour chart or the 15-minute chart or the 5 minute chart, you don't have time to be going back to the 3 month chart doing all this analysis. So you have to mark up every line that you put on the chart so you can know where you're at. Because when you're on a 1 minute and 5 minute, you don't have time to think because money is on the line. You got to make snap decisions. So you can go ahead and use a trend line and go ahead and mark up consequent encroachment, because that's probably a target for price. If it's going to continue to come down, then that's a target. And how do we know this continue to come down? Okay, well, the monthly to Wednesday range, if price keep breaking out of that the last week or two, then it's trying to come down somewhere. And then you're like, okay, well, shit, I'm going to wait for price to go higher, and then I'm just going to take a short, and I'm going to hold it down to consequent encroachment of this wick that we're marking up. That's what I'm looking for. So I'm just this is a 3 month chart. I'm trying to show you how the higher time frame helps you like see what's going on the lower time frames, and the whole Monday to Wednesday range is going to make sense. Okay, so that's a trend line, or is that a ray?
Trend line. The only thing is, it's designed like my. I don't know. What should I make it?
Hold on, quick. You gotta make where does the line end to the right? You gotta scale it back to the left. The end of that line.
It's like the size. It's a month-long one.
Oh, okay.
No, it's not. No, it's not. That's not true. It's just one. It's just one over.
Yeah, you're gonna need to scale it all the way back to where the red candle is right now, and make sure you hold it down. You hold it down shift, because if you hold down shift, it'll make the line straight. Yeah.
Gotcha.
Okay, so now you're gonna have to zoom in and make sure that line is perfectly on the green line. I don't know if I don't think the magnet does that because it's not So you're gonna have to
First, I want
zoom
to.
in.
So, which how should I make the line look?
The line needs to be red because remember price is coming down. I'm sorry, the line needs to be green. So price is coming down, and when price hits that, we're expecting it to be we're expecting price to reverse. That's why I have it as green. So consequent encroachment, the line should be. How do I know? I kind of been trying to figure out what because I just found out about this like a few months ago. He just introduced this. He been doing it for like 20 years, but he like I said, he giving out all his free stuff.
Well, I mean, so far it's just we're just having it mimic the
Yeah,
midline of this date price chart.
yeah.
So
So
do I need
yeah,
the trend line yet?
yeah, you need it on there
No.
because you need to know
So
what
keep it
prices.
green.
Yeah, you need to know what price is going. Now you got to zoom in and make sure it's right on. Make sure it's on. Hold on. Put the thickness as 1. You got it on 4. You got to put it as 1. Yeah. Now you got to zoom in and make sure though, because it look like those lines are perfect, but when you zoom in, you're gonna see how far apart they are. Because remember, we're on the 3-month chart. We're not on the 1 hour chart, so it's a huge difference. So just zoom in, and you'll see the difference, and then just kind of drag it. Yeah. Try to make it kind of thin when you zoom in.
Mm-hmm.
All right, so move it up. Is it on? Is it on
Yeah,
there?
it's on it. Let me see. I'll show you.
Okay. Okay. Well, I guess the okay. What? Okay. So the magnet thing does work. Okay. Cool.
It wasn't the magnet. I just went off of
Oh, the
the
numbers.
magnet was not working for the middle line, so I just went off of like when my cursor kind of changed. See how
Okay.
like right for me now it's a little different.
Okay.
I just
Okay.
went off
Cool.
of
Okay. Cool. Well, yeah, you could do it like that. Now let's go ahead and mark it up. So go ahead and click on text, and then you're gonna have to mark it up as a bullish order block 3-month, and you're gonna have to make the text color pink because what we do for the monthly is pink. So click on the text, and then we got to mark it up because I'm telling you, if you don't mark these lines up, you're gonna be confused. Like, what the hell is this line? Because I even do it sometimes. I'm like, dude, you got to remember to. So put bullish order block 3-month, and then you could put CE, which is consequent encroachment, or you could just put 3M or 3-month or whatever works for you.
mm-hmm.
And yeah, and then put CE. You could put capital CE, yeah, which is consequent encroachment, which means 50% of, and then just put long wick. So you can know like this is a long wick of a bullish order block. And this is why you're marking it up as consequent encroachment. So this is a target for price to come down, and go ahead and put the text alignment, put bottom and put it on the right where it says text alignment. Yeah, bottom right. And go ahead and make that pink so you can know that it's a monthly. Yeah, because pink, we use monthly for pink. And I guess you can make it like a 12 because we're on a 3-month chart. It looks small, but when you go down to the 1 hour, yeah, you can make it like a 12, and then it'll blow up when we go down to the lower time frame. Now, what I want you to do is another thing that he talks about is we want to mark up 50% of the 50%. So go ahead and zoom back out, and then because I think price right now is right at the 50%. So if you go ahead and do your measuring tool and put it on consequent encroachment in the top of that wick, and you'll see where that's what price is right now. You'll see price literally reverse off the 50%. You got to see this for yourself. So go ahead and zoom in at the 50% and top of that wick, and you'll see price literally went down to that and literally reversed at the 50% damn near.
Oh, you're talking about. So you're talking about like this point here, right?
Yeah. Yeah. So I just want you to mark, you just got to see it on the markup. So mark up the top of the wick and then drag it down to consequent encroachment, the measuring tool.
Using the measure. So I got the measuring
Yeah.
tool.
Yeah. And just click on the top of the wick and drag it on down to consequent encroachment. So drag it to the right. Okay.
Like that, you mean?
Yeah, exactly. So now we're seeing that price hasn't came down to, so look, this could be a target as well, man. That's why I say you got to mark this up. Like you can mark this up and then literally clone where it says 3-month order block and where it says CE, you could put 0.25% of consequent encroachment, or you could put 25% of the wick. This is a target. If price is going to continue to come down, it has to pass this area. If it don't pass it, then that means that we're hella bullish. If it can't pass this, then that means we're hella bullish. So what you can do is you can do the same thing, get the real measuring tool and then mark up, or you can clone the green box. You can clone it and then mark up 50% of the 50% and then put the same line in between. And then that could be a target. Because if prices are going to continue to come down and we verify that, then that's definitely a target. And you can label it 0.25% of a bullish order block's wick, because it has to pass that. If it goes past that, then that don't mean that it's bearish, but it means that it's probably going to come down to consequent encroachment. And that means that it's going to help you hold your long. So just go ahead and clone that box and then shrink it. And then you can drag it up to 50% of the top range. And then we'll get that middle line, and then you can mark up the middle line, and that could be a target for price. If it's going to keep coming down, then it's definitely going to be a target. So
here, and then we're going to go to.
Yeah. So what I'm saying is that the green box that you already have marked up, you can
Clone
literally
that, right?
No, I'm sorry. You actually don't have to clone it. You can use the same box. So we actually going to end up deleting that box because we don't need it. We just use it to get consequent encroachment. So use the same box and just drag it up and put the bottom at consequent encroachment and the top at the top of that wick. And then that's how we'll get the 50%.
Right.
Yeah, because we eventually
We're
going to delete the green box. We're just using it to get consequent the 50%.
Yeah.
So you can use the same box and just drag it up. Yeah, because we don't need it on there. We're just using it to get 50% of the wick.
Oh, gotcha. Okay, cool.
Yeah. And then after this, once I show this to you, then we can go and I'll help you mark up the 5-day Asian range. We're going to do it on a totally different chart. So, yeah. And then just make sure at the top of that wick. And then what we're going to do is clone. We're going to delete the box. Once you make sure it's at the top of that wick, we're going to delete that box, and then we're going to clone the consequent encroachment. And okay, so
right.
if the top of the wick is accurate according to the numbers, the way you do it, then you can go ahead and clone the just put it at the top of that wick.
So that's where.
Yeah, just drag it down.
Yeah, that's right.
No, it's not at the top of the wick. Drag it down.
What do you mean?
Yeah, it wasn't at the top of the wick. It was way above that. So just drag it right to the top of that wick.
Isn't this the top of the wick?
Nope. Look at the left. Look at the left. You see the left right there? That's not at the top of the wick. I mean, this is just how I do it. I make sure it's perfect. Like it has to be right there. Like that's how I do it. And then I would actually zoom in to make sure it's even there a little. But you don't have to do all that. That's just the way I do it. Okay, so now let's go ahead and find the 50% and let's clone the consequent encroachment line and then put it at the 50% of this. And so this is going to be a target. So if price is going to continue to come down, because this is an ICT teacher, he teach consequent encroachment, but actually in one of his recent teachings, he said mark up all 4 quadrants. If you see a super long wick, we have a super long wick right here. So we need to mark up all that wick is abnormal. It's not really, it's a dead giveaway that when price reverses, and you see that price is reversing right now because it came up into this last up close candle right there, the green up close candle, which is a bearish order block. And you see now it's looking all confused. I mean, it already hit mean threshold, which is 50% of the body. So go ahead and clone that line.
You know what? I'm worried that I might have done this one wrong then. Give me 2 seconds.
Done which one wrong? Oh, you think, because it wasn't at the top of the wick?
Exactly, yeah.
Oh, yeah, you could try to see. Yeah. Yeah. That's why I was saying, like, make the line, like, put it on the Y because you need to be able to see the price action. Because when I do it, I use, like, yellow, and I make sure well, I can barely see it because I need to see the wick in the candles. But I still need to mark up the price action.
Right. Shoot, I have to redo this. I think I have to redo it. Okay.
Yeah, so you could just zoom in and
let's connect to that. This one. See, it's not. It's dangling above.
Yeah.
So I'm gonna.
Yeah, like yeah. Yeah, and then go to consequent encroachment and see if it's the same. If it's on the same level, it should be. But if not, you could just move it up slightly. But yeah, it looked like it's still. Like I said, the way I do it, I think I'm a little petty with it, but I don't think you have to do all that I do. I just
Yeah,
seen
whatever.
price reverse on me one time, and I was like, okay. But I mean,
Yeah.
the way you're doing, there's nothing wrong with it because as long as it's on there. So yeah, go ahead and mark it now. Go ahead and clone. Go ahead and clone that consequent encroachment, and then we'll put the new 50% on that 50%. Yeah.
Yeah.
Yeah. So this stuff is wild, man. Like I was watching other people's videos. They be confused. They be like, don't know, because they're using all these strategies and stuff. I'm like, this is the market. This is literally how this shit works. Like, this is not a strategy. This is the structure itself. That's why it's just kind of unbelievable that he has this out here for free now. Because he was selling it for about 6-7 years, and then people start taking his videos trying to profit, and he found out people was making a lot of money off his videos that he was selling. He's like, you know what? I'm just gonna give it away for free. Fuck your whole business up. And actually, people was mad because they was selling his stuff, and now they're like, "Why do I have to buy your stuff when ICT giving it away for free on his channel?" So that did mess up a lot of people's businesses, but they was doing it illegally anyway. So you can go ahead and double click on that line and then put 0.25%, and yeah, you could just put 0.25 instead of CE. That lets you know like that's 25% of that long wick, which is a target. Because remember, all this stuff is algorithmic. It's all based on math. So yeah, that's 0.25. So now go ahead and delete the green box, and then we'll zoom back in and see when price breaks out of the Monday to Wednesday range. If it keeps going short, this could be a target. So go ahead and delete that box and then zoom back out. And we probably, you know what, zoom back, delete that green box, and we probably need to go to the monthly chart and take a look before we go back down, because it may be something else we need to mark up, because I'm trying to show you how to see where price is going. So go ahead and delete the green box. Boom. So now we got two targets. Actually, you may want to, well, all right, now go to the monthly chart. Just type in 1M, because there may be another area we need to mark up to see where price is going. All right, now zoom out. Yeah, let me see. Zoom to the right, because I can't really see price. You got to scale it to the, make it look like pencils. Yeah. All right, so
No, I gotta let you know I'm running out of time here. I gotta bounce in 5 minutes or
okay.
10:30 exactly.
Okay.
Sorry
Well,
about that. I got a appointment.
no problem. Drag the consequent encroachment lines all the way to the right, because I see you're not going to be able to see it. Drag both of those lines to the right. Yeah. Are they locked?
Sure
Yeah.
are.
Yeah. Drag them. You got to hold down shift. Yeah. About right there.
Here?
Yeah. Maybe one more over, and then do the same one for the next one, because you won't be able to see it when you go down to the 1 hour chart. Just drag it over. Yeah. All right. Now go down to the 1 hour chart, because these are targets right now, because we're on a higher time frame. So, and that long wick is a dead giveaway that if price is going to keep going down, this is going to tell us everything. So go down to the 1 hour chart. Okay, now scroll over. Damn, that's crazy. That's crazy. That's why I love this shit. That's crazy. I mean, it's showing you exactly what's about to happen. So scale to the right, because look what price is now. It's only Wednesday. It's probably going to keep going a little lower. So if it breaks out on Thursday or Friday, then that's a target right there, because this is a higher time frame. That's why I make sure it's extremely accurate, because the 50% and shows us exactly what's going on. Now, before you leave, let's go ahead and find the QPs around those two areas, especially the first line. So go ahead and find a QP around that 25% line. Because think about it. If you base price just, it's still kind of like a pattern. If you just don't do the QPs, remember price is going where the orders are. So go ahead and find the QP around that 25%, and that's exactly where you should look for price to go if it breaks out of the Monday to Wednesday range. So find a QP around that 25% line, and then you can mark that up. You can use a trend line. You don't have to draw a line across the whole chart. You could use a little small trend line, and just label it like you know. So let me see what orders are around there. We got 33.
It is. Yeah, I got you. I got you.
Hold on, we got 33. Go back to the 25% so I can see the 25% line right there. So we got 33,000.
Yeah, that's marked as blue right now.
Okay, so we got 33,390. So what major QPs do we have around there? Because you got a micro, you got the
There you
micro
have,
QP. Because remember, you got the
yeah,
500s, you got 250, and you got the 00s, the big figure.
right.
Those are
So
major QPs, and then inside of those QPs, you got the 20s, the 50s, and the 80s. So you got to find the major QP first. So what major Q? What's the majors? What's the closest major
250,
QP?
250 and 500, so it's closer to 500.
So what QP is before it actually hits the 25? Because ICT teach us to get out before it hits our target. So
Oh, I see.
what major QP do you see before the 25%?
It's gonna be 500. About yeah.
Damn, that's crazy. That's crazy. That's crazy, man. I mean, that's a confluence. Like this shit is crazy, man. That's why I mean, okay, so go ahead and use a trend line and mark that up and just put uh major QP what is it, 500. Yeah, you don't have to draw the lines across the whole chart because sometimes it'd be confusing. So I've been learning to just put, yeah, and then just label it uh, major QP 500, or you could put the actual number on there, 34,500 or whatever, or just 500. Now we got to find a micro QP. So find a micro QP above and below that
And I
500.
want to change this color so we're not talking about months here
Uh,
anymore.
yeah, you could change it to whatever you
So
want to do for QPs. I forgot. I don't think you.
why not?
Yeah, yeah.
In the line, let's go with, I don't know. Let's just make it yellow as well.
Okay. And you can zoom in. You got to zoom in for the micro QP, and you gotta and make sure that's the right exactly on 500 because I don't know if it is like it's on
Oh, it's not.
505.
No.
So zoom in and then put it on exactly 500, and then find a QP above and below that, and then you should be done after that. Because if it keeps going lower, I don't think it's going to break off. It may do it next week, but if it keeps going lower, then we have targets for where price is going.
Dude, this is so cool.
So go ahead and type micro QP and make it smaller. So make it like a 10 because you don't want them to be like the same font, just so you can know it's less masculine. And so micro QP, and then go ahead and find a 20, a 50, or 80 above and below the yellow and green. So you can find one like above the 500 and then one below the green line, which is a
Mm-hmm.
micro QP, like a 20, a 50, or 80. So it'll be 34,520, 34,580, 34,500. Uh, so we got 34,000. Let's see,
500.
33,580 right there. There's an 80 right there.
Yeah, but it's at 500 even. So it wouldn't the. Oh no, wait. Do I find the micro in relation to the major or in
No,
relation
I'm
to
saying,
the
yeah, I'm saying you want to find one like above. What I would do if it was me, I would
above
find
below
one
the major?
above. I would find one above, in between, and below that green line. Because sometimes it'll go
Yeah,
past 500 and then it'll reach for a micro QP and then reverse. Because
yeah,
remember,
exactly.
I think prices are going to continue to go lower, but remember, it's not going to continue in a straight line. It's going to reverse all the way up and then go all the way down. So it's like you don't want to give all the money back to the market. You want to take what you can take off.
Yeah, so
So
it's gonna be at 0,
yeah,
0, and 80.
yeah, zoom in a little bit because it's like you still kind of to look
Oh,
at
I got
these QPs, you want to like be all the way zoomed in. Yeah. So so you could put one like above the yellow, your major QP, and
you. Think so?
yeah, you could put one. You could put one like in the middle and below the green line.
Yeah,
Your
exactly.
micro QP. Yeah. So
So that one's at. So I got to put it at 3.3. Uh,
hold on. So go back to 500 so I can see myself because I'm trying to see what you see. I'm trying to
all
see
right.
what a micro QP is. Below,
Okay.
so you could find one in between the yellow and the green, and then one right below the green.
So because the green is at this blue number here. So the digit's 391.
Right.
Which
So
means the micro QP around it is going to be
yeah.
400 and 380.
Yeah. So
Does that make sense?
the micros is the 20, the 50s, and the 80s. So find one right below the next QP, the micro QP right below that 25% line. So what's the next one? So it's an 80. Yeah. So scroll up a little bit and then put it on exactly 33,780. I'm sorry, 33,380. Yeah.
Look at that.
And then put it on the next QP, micro QP right under, in between the 500 and the 25%.
So the next one closest to the fact, because
Yeah.
I've got hang
Yeah.
on.
Yeah.
You see that this one's above the green, right?
Yeah, just put it on the one like right after the micro 500 QP because I think it's one right under that. So just keep scrolling down.
Wouldn't
To
that
what
be
it,
arbitrary though? Like, I
no,
guess okay, I see.
I'm trying to
Maybe
show you
not.
for targets. I'm trying to show you for targets,
Yeah.
like because sometimes it'll hit some of this stuff and then reverse up for like a day and then come back down and come to the next micro.
So that's 500. So it'd just be 580 or 480.
Yeah. Because see, we on a 1 hour chart. When you actually really start doing this stuff, you're gonna be on a 1 minute chart, and so it looks a lot different. When you go down to the 1 minute chart and you seeing where price is going, price may just come down and slam through all these, but this is letting you know, like, because you may want to take something off, like you may have like 3 positions, and you're like, okay, well, I'm gonna get out at the 500. I'm not gonna wait for it to come down to 25% because remember it may reverse up and then come down to the 25% tomorrow, but you don't know if it's exactly gonna do that. I mean, but it's like sometimes you just can't wait. It's too much pressure, even when you're on demo, because you're supposed to be treating demo like it's real money. So I'm just trying to give you targets to go after. Now, try to find a major QP above that 500 as well, because price is like way up there. So we need to find a QP. We need to put it on 250 as well. So so find a 250 because that could be a target as well. Because remember when price breaks out of the Monday to Wednesday range, you want like 3 to 5 positions on. So in your demo, you could put like a 0.05, like 5.05s or 3.05s.
Wait, what? Wait, 250 above what?
Find a QP above the 500, the 250, because I think it's 250. Yeah.
Yeah.
So
So 500 is going to
33,000.
be
Oh, well, 750. Yeah, 750 then.
50, right?
Yeah, 33,750. Yeah. And then you can label that major QP 750. So label it major Q 750 and then scale out so we can see where price is now. And these are targets. Because a lot of people don't even know anything about ICT or anything, but they know about QPs and they always say, I don't know what price is going, but I'm getting out at them QPs. They're like, I don't have a clue, but I know price is going exactly where those orders are. And that's where the QPs are. So
I feel like I should make them more longer. What do you think?
huh?
Maybe not. Do they need to be longer or no?
I mean,
Probably,
if you
right?
do, you could scale it to the right. Yeah. You could do it to the right. So this could be a level, especially if price breaks down. Like if you can't mark up the order blocks and stuff, then definitely have the QPs marked up. Because sometimes you'd be like, okay, I don't know what price is going, so you'd be like, okay, well, where are the quarter points at? You know, and I could show you like something else in the future where, yeah, the quarter points is pretty, it's pretty powerful. So now we know if price keeps going lower, we have the order block, the higher time frame order block lined up. And because right now it's still in the Monday to Wednesday range. So if it keeps going lower, then, hold on, just before you leave, go ahead and mark up the next QP as well. The big figure, which is what?
Major?
34,000. Go ahead and mark up 34,000, which is right above the 750. I'm just trying to make sure the major QPs are marked up because price is still inside of the Monday to Wednesday range. If it breaks down, then you already know it's probably coming to one of these orders. You really need to have an order block line, marked up probably on a weekly or the daily. So go ahead and put it on 34,000. That's big. That's what ICT called big figure. So scroll up to 34,000. That's the next one. Yeah. And you could just put major QP 34,000. When you at the big figures, you always want to just call it like a big figure. So you could put major QP 34,000 big figure. or you could just put 0, 0. But the big figure is important because that it definitely has to come to those orders. Like that 34,000 is what it's really reaching for. It's coming through the QPs. It's coming for that big number. So a lot of times ICT, he always talk about like what is price reaching for. And so, yeah, it's going to come to the 500 to 750, but it really wants to hit those big figures. That's what the majority of the orders are, because you have to think about it. People on Wall Street, like it's just easier for people to just say, hey, give me an order of 34,000, Dow Jones Industrial, instead of saying $34,712.18. People don't have time for that. It's just like, hey, just give me 34,250 Dow Jones Industrial. Give me that. And so that's what a market is going to, what the orders are. So, and it's definitely at these big figures, and it's at those order blocks. So the only thing you're missing right now is to find an order block on a weekly or a daily, a bullish order block that would actually push this up. But we found a higher time frame, consequent encroachment. So this is kind of good enough since you don't have time. But you'll see if it breaks out of the Monday to Wednesday range, it's going to hit these areas.
All right. Well, I got to run, but hell yeah, let's see what happens.